Hey, good evening, everyone. Tonight, we have a special webinar through Gravitas Impact. My name is Keith Cupp, the CEO and founder of Gravitas Impact. And we're talking with three senior coaches from around the world on reducing risk and positioning your company for success. And I want to start with a little bit of story, and it comes from Jim Collins' research in Good Great. He tells the story of Admiral Stockdale, who was a POW during the Vietnam War. And he was brutally treated, tortured, and was in the Hanoi Hilton for 8 years. And during that time, he watched two different groups of fellow prisoners meet their demise through time. One were those who were overly optimistic and others who were just too pessimistic. And out of that, what he found, and I want to read his, how he surmises this. The Stockdale paradox, in retrospect, what he learned was, you must retain faith that you will prevail in the end, regardless of the difficulties of today. And at the same time, you must confront the brutal facts of your current reality today. And so that has become known as the Stockdale paradox. And that applies where we are, everyone, relative to COVID-19 and the havoc it is wreaking on companies. And I can tell you as a fellow CEO, it is right in front of me and in front of us. And so we wanted to invite three coaches into the conversation. Brad Giles from Perth, Australia. Good morning tomorrow, Brad.
Hello.
Ron Huntington in Seattle, Washington, and then also Juletta Broomfield in Central America in Costa Rica. Coaches, welcome, and let's start first with CEO's mindset. We have CEOs and company leaders listening in. What would you say to them if you were in a conversation about mindset and their leadership of their teams through COVID-19? Ron, why don't you lead us off?
Well, Keith, thank you. Seattle is kind of ground zero here for this particular virus and its entry into North America. And I would say the mindset you have to have right now is pragmatism. It's that Stockdale paradox, being right in the middle, being very objective. And if you are able to maintain that position along with conscious level 5 leadership, which Jim Collins talks about as well, I think you'll find that pragmatists will prevail as the next few weeks and maybe month or two unroll in front of us here. So stay pragmatic, stay in the middle, balance your leadership skills with the truth that's coming out. And I think relying on rational resources to maintain that pragmatic outlook is really the key to getting through this crisis.
Okay, so principle number one, stay pragmatic. Juletta, over to you. You have a passion for healthy CEO mindset outlook. Talk about that a little bit.
Thank you, Keith. What I would recommend is strong advisors. If you haven't already got an advisory board, create one, build one fast, and have that with a variety of strengths and different backgrounds to advise you across strategy, people, execution, cash, and anything specific to your business that you're be concerned about. The other thing I recommend strongly is to listen to and read material that is balanced. Social media seems to have gone crazy, and it's so important to be listening to balanced material. And again, coming back to that Stockdale paradox that has the brutal facts, but it's actually, if you will, digestible and actionable. And I think ultimately is mindset and physical health go together. So it's extremely important to be fueling yourself with the right nutrition and doing the exercise. Never give that up, because there are going to be even worse days than we've experienced today, and you need all your faculties to be able to lead.
Okay. And Brad, over to you. Your thoughts if you were in conversation with the CEO?
This is where leadership matters right now. It doesn't matter where you are in your leadership journey. The actions that you take now have enormous ramifications. As I say to my 6-year-old daughter, we can do this the easy way or the hard way. She always seems to choose the easy way. Now, the hard way is not acting immediately. We need to understand the brutal facts, Stockdale paradox, confront the brutal facts, and we need to act as soon as possible to stabilise the company, to stabilise people's mindsets, to secure jobs and supply chains.
Okay. And the first thing that we want to lead off on in this conversation then is you've got to have the cash to continue, the cash flow and the cash resources. Ron, why don't you lead us off? What's your advice to leaders regarding putting themselves in a stable or strong cash position as the market retracts?
Well, I think that, the first thing is to take a quick inventory. I've had a couple of clients even today who have gotten back to me, having had some great advice that we passed on to them in the last couple of days, who said, we took an overall cash inventory and I put my CFO or my head of accounting on this, and my team got together and quickly we looked at all the ways we could quickly additional cash. My advice to them was, our job right now is to extend your runway so that you have more time with a comfortable financial foundation to work through the unknowns of the next 3 to maybe 12 weeks, if that's how long it takes for this thing to finally turn. But you need to find ways to give yourself more room to get off the ground and get airborne again as we look at the future right now. And cash, as Brad says, cash isn't just king, it is God at this point. And I think my advice to clients right now would be, go out there and find as much cash as you can. If that means going out with the interest rates now dropping to zero here in the United States, now would be a good time to go out and have a conversation with your banker to see if you can even get your credit lines extended at these record low interest rates. So that would be my initial advice to clients starting out with what's most important, having enough cash to stay airborne as long as you can.
Brad, in your article, which Ron has added to also and will make available to listeners, you advocate running 3 scenarios. Talk a little bit about that.
Well, let me start with the question. What were your revenues in February? It's now the 17th of March. What were your revenues in February? And when is the next month that your revenues will be the same as they were in February? No one will be able to answer that. Maybe not no one, there's some recurring revenue SaaS models, but broadly, it's a very hard question to answer. And so overarching, we have a huge amount of uncertainty. In the face of uncertainty, what we need as leaders is something to plan around. And so beginning with maybe not a worst case scenario, but what's a really bad scenario? What's a good scenario and what's a likely scenario? So I picked 15% drop, 30% drop, 45% drop in revenues to have your accountant draw up budgets for the next 90 days, April through June, and to be able to ask the accountant, you need to draw up the budget so that the budget under those 3 revenue drop scenarios breaks even. It's a very hard task to do, but what do we need to do? Because in the face of uncertainty, as I say in the military, any plan is better than no plan. So at least when things happen, we know what to do. So if we're looking at a 30% drop, we can begin to plan and work around that. We need some kind of idea on what to work on.
Okay, good. So on one hand, look at 3 scenarios and then make the appropriate changes to get to break even or better in 90 days. And then Ron, as you shared, look for additional sources of cash you may not have been thinking about, whether it's debt or other sales, etc. Juletta, anything to add or advise CEOs in regard to cash stabilization and having enough fuel for the future?
Thanks, Keith. I would, if you've already been using the Power of One tool, I would definitely use that because you've already got the data there and you can play about with that in a very efficient and fast way. I'd also do, as Ron suggested, go out to the banks, go out to your service providers, and also keep a very, very strong watch on what government, federal and state, are doing, because they're bringing in packages that companies can take advantage of. And even customers, and go out to customers and talk about the things that they can do to help. You can help them and they can help you. So it's about a dialogue, again, back to the brutal facts.
And on the government aspect, Juletta, I'd like to add, as I've listened to coaches and clients worldwide through coaches, is governments are preparing, are already putting out their grant programs, special loans, special incentives. Here in the United States, there's going to be a suspension of payroll tax to an extent and delay of tax payments to help businesses with cash. So my recommendation is get somebody on that right away, doing the searches for what programs may apply to your business and get in line quickly as that money becomes available. Ron, did you have something you wanted to add to that?
Yeah, I do, Keith. And it comes back to Brad's, three option scenario that he had there. And I think what my clients in the past have been able to do is when we've taken a look at those three options, the least favorable option, the middle ground, and then best case option. I think at the contingency level in each of those three options, you've got to be able to figure out what are the metric triggers, what are the action triggers, what are the event triggers that will force you to make the cuts or make the adjustments immediately. And by knowing the triggers at each stage that you reach, as those tripwires are crossed, I think it's time for you to be very bold and take the specified actions that you need to take immediately so you don't lose precious time. So when you encounter a trigger and the trigger is tripped, that you certainly then take those actions along with your team and execute immediately on what you've already agreed to do if you cross that point.
Okay. And the key is running the scenario, knowing that well ahead of time. So when the time comes, it's a matter of execution and not emotion. Okay.
Yes.
Thank you for that, Ron.
Keith,
Okay.
if I may add one thing,
Please.
I think it's important for the CEOs to consider their stakeholders. And if there are some large investors involved in their business, to very quickly talk to them. I've been involved with clients and these discussions have been very, very fruitful and can actually ease the mind of the CEO.
Okay. And Juletta, let me just run with that a little bit. As a coach, do you play a facilitation role in those dialogues?
Yes, I do.
Okay, talk just a moment about that. What's the value to the CEO and what value did you bring to that? This is an interesting aspect here.
You raised the factor of emotion. The CEO is very often very emotional at this stage. It's driven by fear. The coach is a third-party independent that can come in and talk through the figures, talk through the situation, look at the scenarios with the CEO, basically have their back. And that comes over as a very strong message to the investor.
Okay, thank you for that. Okay, we started out talking about CEO health and mindset. Don't go it alone, take care of yourself. Then we talked about cash and cash flow. Now let's pivot to talent, the people in the company. Brad, talk about the people equation here as companies work through COVID-19. What would you advise the CEO to be thinking about or action to be taking?
Well, it comes down to math. That's not what you thought I was going to say, but what is the likelihood that someone is going to get sick? And if that happens, when we consider that risk, what do we need to do about it to protect other people in the organisation, to protect the revenues, to protect the cash? It's a war footing around protection. My general advice to every client is anyone who has the possibility to work from home, we need to get them to work from home within days. And that may seem overly, depending on your mindset right now, that may seem a bit overreacting. But if 50% of your people get the virus and are out for between 2 to 4 weeks, we've got a whole new problem to deal with. And so this is purely risk mitigation from a revenue and cash protection perspective. But then we couple that with the message that we're sending to people, which is the right thing to do. So we're saying to them, we are protecting you. We know that the data out of China is that 20% of people approximately have to go to hospital, and of all of the people that have to go to, let me start again, and out of all people who contract the virus, about 5% have to go to the intensive care unit. So these people will be out not for a day or two, they'll be out for a long time if the virus comes into our workplace. I think it's really important to understand that risk and mitigate it in the context of revenue and cash protection.
Okay, and that applies to the CEO too. I've been thinking about this even today. What happens if I become ill and I need to make sure I have the right successor in place to run until I get healthy, etc. So CEOs, we're not Superman and Superwomen. We need to make sure that we have our number 2 prepared and a backup plan there. Ron, let me give you a scenario. A CEO is listening in, running a company. They've run the numbers, and there's no way to make it unless they have they cut payroll. They have to reduce payroll, typically the largest expense in a company. How would you advise them to approach that?
Well, I'd quickly, most of my clients have actually done this exercise well in advance, because we could kind of see when things were getting a little bit troublesome in China itself. We had them go and build a list of, if you had to reduce staff, where would you start? We had them do a top grading assessment of their team. Who could you absolutely not afford to list, and whose back must you have, and must reassure them that you have their back before this becomes a crisis? Who are the B players that we want to potentially hang on to if we can? And importantly, we start with, let's make adjustments at the C player level, and let's get rid of anybody who isn't absolutely essential to our recovery. If we start there and then work our way back up that chain, we will probably be properly prepared if this really gets ugly, which it's now becoming. But at the same time, you need to be able to reassure the entire workforce early on. And Brad talks about this in his book, Made to Thrive, as the ambassador of the entire organization, as the chief ambassador. You know, your job is to let people know that we're doing everything we need to do. We have a plan to protect the company and your jobs. We have a plan to protect your job first and foremost, and make sure that you are able to function effectively in your role and help us work out of this. And thirdly, we want to understand that we want every employee to understand that we are committed to their health and safety. And that really is an important job of communication at the CEO, the leadership level, is to give them those reassurances, even though you might have to be brutally honest and say, if this gets really ugly, you know, we will try and save your jobs as much as we are able. We'll find ways creatively to keep everybody employed. Everyone might need to make some adjustments and maybe work and not a 5-day week. Maybe they'll have to sacrifice and give up a day so that we can keep more of our top players working here effectively and sustaining the runway that we're looking to build for our company's survival. You know, those are the kinds of things that will have to come out from the leader's mouth, from the CEO's mouth, to reassure the entire organization that we've got a plan and that the plan is working.
Okay. And Ron, you refer to Brad's book, Made to Thrive. Okay, this is what it looks like here for those looking in. Brad, we talked earlier about messaging, the importance of messaging from the ambassador, the chief executive. Talk a little bit about that.
Well, I think we've got to understand what is happening in the mind of our employees. Most of the people on this call, within reason, are probably relatively financially secure, whereas most of the people who work for the people on these calls, most of our staff, there's a very good chance that they're living week to week or fortnight to fortnight, paycheck to paycheck. So the concerns that we've got about our health and the financial security of our company are good, but there is an ever-present imminent danger for staff right now that we need to address. So an idea is that the enemy actually isn't the virus from the CEO's perspective, it's social media. Right now, the people who work for us are probably talking about the virus, reading about it, or worrying about it. If they get laid off, they can't eat in how many days? That is something that we've got to be really mindful for. So consistent, clear messaging. My suggestion is between 2 days and 1 week from the leader, like a drum beat, and it could be 50, 60% of the same material, but this is, as Ron said, this is what we're doing to protect the company and all of the things that are happening. This is what we're doing to protect your job, and this is what we're doing to ensure your health. That messaging is the only opportunity. It's one of the few opportunities that we have to counter that social media that all of our staff are doing in the context of they're worried about how they're going to eat, how they're going to provide for their family. They're incredibly worried. And then formulating a sick leave policy. What happens within that if you get the virus? How are we going to protect you? But to your original question very quickly, some people I've seen have decided to only work 4 days a week and to take a 20% pay cut for the whole organisation, or the CEO takes a 100% pay cut, or some variation thereof. So there are ways and mechanisms, rather than only culling the number of people, to cull the payroll cost that is worth considering.
Okay.
Keith, one of the ways that I think this can be done is to include a cross-section, key members of the team, and tell them, if we were able to keep everybody's positions in the company, what would we need to do, with the understanding that we have these 3 thresholds that we're going to have to meet. And you might engage the team to say, if it were on all of us to figure this out, what steps would we take, in serious fashion, to be able to ensure everybody's job as soon as we start emerging and coming out of this crisis.
Mm-hmm. Okay. So one option is to look at a payroll reduction overall. Another is to move underperformers or non-critical functions out. Juletta, over to you. How would you manage the conversation with the CEO? They come to you and say, hey, payroll's too much. I need to cut it 30% in my middle scenario. What would you want them to be thinking about as they looked at that challenge?
I think Ron and Brad have covered a lot of this, but I think it's about the business continuity, Keith, who absolutely is necessary to keep running the business. If the business is going to keep running, for example, some of my clients are going into what they call hibernation with their current business model and looking to pivot. So they're having a choice point to hibernate their current business, create a new one. And so they're looking at the personnel and their competencies to see who can help them hibernate and help them pivot. So it's really down to what your figures are looking like, and what personnel do you need to take you forward. I do like Ron's recommendation of embracing the team. if you think about one of our attributes, Keith, systems, we talk about leading change. And critical in that is that you have a guiding coalition, and then you embrace the entire workforce if that's possible, so that you get the best and brightest ideas coming up. This gets harder when you're basically exponentially working through changes, but it's still worth it. And so I would recommend that.
Okay. And Juletta, you're referring to some of the work by John Cotter when you mentioned leading change?
That is correct.
Okay, so for those listening in, a great resource to have. Okay, so now let's look at the sun rising scenario. The CEO has successfully managed the team size and payroll. They've cut areas and refocused cash. They're caring for themselves and their culture. Now let's talk about innovation and opportunity. How is the CEO, what should they be thinking about after they get their company stabilized and secure in regard to opportunities for the future? Ron, why don't you lead us off in that discussion?
Well, I think first of all would be opportunities to perhaps go out and find customers that have been abandoned, new business that's been abandoned by people who maybe haven't survived this particular crisis and are looking for new suppliers, new vendors, whatever that will fill the void that they're now finding in the market. The other thing, of course, is taking a look at how can we then begin to improve margins looking to the future. And also on top of that, I would say, are there opportunities out there perhaps to acquire businesses who had, a reasonable base of business before this happened, but that we can then rebuild quickly with our intact teams in the new environment that's going to emerge as this crisis passes.
Mm-hmm. Okay. Brad, if I may put you on the spot just a little bit with this question, give us just a thumbnail overview of the attribute map and how might that apply in changing circumstances for a company to look at how customers buy in their competitors. Thoughts on that?
So the attribute map analyzes the attributes in a market of either service delivery or the way that a market is constructed. And then it compares our performance today to our competitors in a graphical format is the best description. But the point is it gets a team to look at and to understand the points of difference or the key points on which we compete against our competitors and how does that relate to the customer. So I think the attribute, to your question, the attribute map would be quite helpful if we framed it around something like, so if we wanted to get a 5% gross profit increase by December 31, and then we looked at the attributes and then we considered all of the threats and the challenges and what's happening in the marketplace generally, what is going to really matter to customers. So as an example, I was talking with a customer of mine and I said to them, I would actually pay more if this service that they sell was delivered over the internet right now. Now, I may be an abnormal client, but just thinking of outside of the box, thinking about things through many different lenses, what really matters, like we put ourselves into the mindset of the staff, thinking that they're paid paycheck to paycheck, thinking about what really matters to the client now and how can we change or pivot.
Okay. And in the 90 days from when COVID-19 hit the market to 90 days later, I'm willing to bet a lot of businesses have a little bit or maybe a large difference in their attribute map. And for CEOs listening in, if you're not working with the Gravitas coach, just reach out to me, Keith@gravitasimpact.com. We'll connect you with the coach who could help you with your attribute map. Juletta, over to you. Think about innovation and opportunity after a company is stable and solid. where should they be looking and what should they be looking for opportunity?
So I come back to the competencies that the business has and the assets that it has. So for example, let's say that maybe it's in travel, but its real competency is in marketing and sales. Can it deploy that competency in other areas? Brad brought up, is it already digitalized? Is that an opportunity for it? And if it's partially digitalized, can it go full steam ahead? Another area that I always encourage to look at is the assets. How can you leverage the assets that you already have? For example, you mentioned clients. What's your customer base? Have you been leveraging that customer base, all of that customer base, or have you left some a little bit dormant? So do you have an opportunity to go out to them? Again, back to partners. What alliances have you got? Can you do more in that area? So for me, it's really, really out of the box thinking, using your competencies and assets, because those are the strengths that you can build on.
Okay.
Keith, if I may just add one quick point. We all know there are going to be thousands of businesses that go under. What we need right now in the context of thinking about how to grow revenues or opportunities is out of the box thinking that I think all three of us have said. The biggest enemy to out of the box thinking is people who say, well, we've never done it that way, or the customer won't pay for that. So knowing that is going to be the first thing that people on the leadership team say. We've got to be able to say, people have never paid for that before, or we've never done it that way, but we get one shot to save the company. We get one shot to improve our revenues, and it's right now. Understanding that is going to be the response of a lot of people.
Mm-hmm. One other aspect I'll add to the discussion is look at your current clients and the industries they're in. Not all industries are going to hit the tank. There are some industries and niches that are going to thrive through the virus time in the season. And if you have one customer in that area that's doing neutral to positive, go after the other customers in that market. Build your revenue and some of your future revenue around the strength of an existing customer in a stronger market. That's another way to help strengthen the front end of the business.
Keith, that's a very good point. And yesterday I was with a client and we were literally looking at Italy, South Korea. Where are the white spaces and the opportunities that are actually growing? Because those markets are going through the challenges. So that was an incredible brainstorm as well. So totally agree with you.
Okay. And that comes to the concept of what is the problem that needs to be solved that your company can help apply a core competency to that you're not solving today that they'll pay money for. That's connecting what Brad shared a little bit ago too. Mm-hmm. Hey, we're coming close to the end here with our time. I want to have a brief discussion on supply chain. What should CEOs and leaders be thinking about relative to their supply chains, if they're a product company, manufacturer, even a services company? Brad, your thoughts on supply chain thinking?
There is so much uncertainty around this. I've got a client that comes to mind immediately, and so much of their equipment has come out of China. So they've already looked and have sourced alternate suppliers in other countries in Asia and in, I think, South America as well. So they've gone from one point of supply to about 4 different points of supply. So there is no good if you have nothing to sell because your supply chain has let you down. So going in and understanding all of the points of supply that are critical for us being able to create revenues, and then I guess, not even wondering how they're going to survive, simply looking for alternates and beginning to deal with alternates that are completely different. I think that, as we've already seen between, say, Singapore and South Korea and Italy and China, different countries are going to come out of this with different levels of capability, and diversification in supply chain, I think, is really important right now.
Okay, good. Ron, your thoughts on supply chains?
Same thing as Brad. I think right now, the first thing you concentrate on is cash. Second thing would be, what do we do to ensure that our supply chain is maintained? And if it looks like any part of it is going to be disrupted, then what options do we have? And I would put those in play immediately, start putting feelers out, start making contacts, start looking at options and alternatives, and get on that right away, because the thing that'll grind your own business to a halt, secondly, after running out of cash, would be if you haven't got product to be able to put together whatever it is that you offer in the market. So those would be 1 and 2. At the same time, you're multitasking. You've got to take care of the other things we talked about, which is letting your people know that they're valued and that you're doing everything possible to maintain their jobs, to maintain their livelihoods, and to maintain the health and well-being of the organization. And then lastly comes that looking for, or maybe simultaneously, but looking for margin growth, opportunity growth, and those kinds of aspects in stewardship through this crisis.
Thank you, Ron. Juletta, final comments on supply chain or systems?
Yeah, I'm thinking that if you are still working with the same or even new suppliers, Keith, is really to collaborate with them and to work through this. As you said before, don't go this alone. And your supply chain are partners. And so collaborating and co-creating a way through this uncertainty is really important.
Thank you for that. Well, Ron, Brad, and Juletta, thank you for joining us tonight from all across the world. I want to end with a little short story for those listening in. On Saturday night, my wife and I decided to watch a movie. And after watching it, I said, this is probably one of the most fantastic movies leaders in business should be watching. It's an oldie but a goodie that Ron had recommended to me many years. It's called Master and Commander, and it has Russell Crowe as the captain of Her Majesty's Surprise. It's a British ship on the high seas. And throughout the movie, he's given different scenarios of change, adversity, and opportunity, and he responds differently, sometimes successfully, sometimes unsuccessfully. And the net of it, they are successful, but his character is built throughout the movie. And so it's lessons in leadership for us who are running businesses. Master and Commander, starring Russell Crowe. Recommend CEOs, you watch it and discuss it with someone, the leadership lessons through changing times. Hey, thanks for joining us, everyone, tonight. We'll do this again. Brad, Ron, Juletta, have a good day. And Brad, good morning tomorrow in Australia.
Thank you.
Thank you, Keith.
Thanks, Keith.